Hello everyone, welcome to Hawkeye Traders. My name is Randy Lindsay, host of today's live training session. I am here to educate and inform you on the proper use of Hawkeye on the live edge of the market. I want to make sure that everyone knows that we are here for educational purposes only. Let me get my disclaimer up and over. That Hawkeye Traders is not a registered trading advisor, so we cannot give you trading advice. We cannot give you any buy or sell recommendations. Any past performance that we show, any methodology or system that we show is not supposed to be giving you advice, but it does not also represent future results. So please make sure you use common sense in applying the things that we teach and train you on today. Make sure you get advice from a competent financial advisor before you invest any of your money in any of these markets. Futures, stock, forex, and options trading has large potential for reward, but also has large potential for risk, and you need to be aware of these risks and be willing to accept them in order to invest in any of these markets. Please do not trade with any money that you can't afford to lose. Remember, past performance is not indicative of future results, and that any of the trading that we show in these rooms should you should make sure that you do not trade with any of these markets in live accounts unless you have first proven you can consistently and profitably trade in a simulated account. And then at that point, if you start trading with live money, make sure that at that point you start working on your mindset, because that's where the real bread and butter comes in. That's where the real work starts. I've got several platforms up for you today. Right now I'm showing the MetaTrader 4 platform with our Hawkeye Tomahawk trading software. I've got NinjaTrader on the go and TradeStation ready also. I was going to start off talking about a little bit about Forex this morning and about the Tomahawk system. It's been a while since I've mentioned that in here, so I want to make sure that anyone who wants to see a demonstration of Tomahawk system can see it and knows how to get a hold of it. What's different about Tomahawk is that for a $47 trial, you get a full month to access the system, to access the training, and to have your hands on the software. What comes with the software is the Tomahawk scanner, which is what you see right here in the corner. Tomahawk scanner shows various time frame grid of all of the currencies and the relative strength of those currencies compared to the others. So much like what the Fat Man does, the Tomahawk scanner will show you what the strong versus the weak currencies are. So when you see a big bank of white on the scanner, the top row being the 1 minute, the second row being a 2 minute, 3 minute, 15 minute, and I believe this is a 30 minute. It could be an hour. I forget exactly this time setup on that. The weakness of the euro is very evident across all of the time frames and across all the other currencies. You can see that relative to the euro that the New Zealand Australian used to be the dollar, but now the dollar has weakened considerably against that. But on the 1 minute time frames, which the Tomahawk is primarily focused on scalp trading, it allows you to see the entry point and the profit target potential based upon the initial target. So once you see an initial entry signal, when you see weakness and strength on the corresponding pair, then that gives you the potential for taking your 10 or 20, or in this case, a 46 pip potential profit on your trade. Usually the targets are 10 to 20 pips. So when you see the initial target entries and you get your profit target, then you take your profits and allow the remainder to roll. And you can see that across the board, if we were looking for euro weakness, then a short against the euro US, a short against the euro pound, a short against the euro yen. Actually, you can see a short against any of the currencies at the initial signal would have yielded very profitable results. In this case, you would have had a nice drawback. You have a 10 pip, actually this looks like about a 9 pip right there, a 9 pip drawdown versus a 35 pip reward potential. That was the weakest of any of the signals. The rest of them had virtually no drawdown after the initial signal. And most of them were very tradable. On the contrary, if you see one that looks extremely strong, like the US dollar, then you just simply pop up your US dollar pairs, and then you see the corresponding strength and weakness versus the US dollar. So when the initial signal comes, then you can see the same type of correlation. The dollar being the strong pair relative to the pound or the yen or the euro, you can see the pound, the yen, the euro, and so forth. So you can see the corresponding strength and weakness. So you're not seeing the same type of signature off of the US dollar strength because there are other ones like the Australian, which you can see really had no trade. The New Zealand was strong. You can see it really had no trade. But the pound, the yen, and the euro all were strong. You can see that those were the best trading opportunities right there. The pound, euro, and the yen, and the Canadian also at that time. You can see very, very weak. And so you can see based upon the scan, it's kind of showing you exactly which ones to look at and to trade and to do that. It also comes with the Tomahawk Fat Man. It's a Fat Man that allows you to set up and trade in non-standard time frames. So you can see these are all non-standard time frames as well. If you've got a 1 minute, I'm trading all these off of 1 minute, but you've got a 1 minute, here you have a 3 minute, here you have an 8 minute. That corresponds to the chart setup here. I think this is a 1, 2, 3, and maybe this is a 5. I'll have to look at the settings to see. Let me see what that is. Indicator list. Let me see what that time frame is. Yeah, it's a 15 and an hourly. Yeah, so it's M1, M2, M3, M15, and hourly setup. That's what it is. Of course, you can set them to be any time frame that you like. That's the nice thing about it, is that you can set these time frames up based upon your own trading strategies. These are just our initial setups and the ones that we've found that work pretty nicely over time. And so those are the ones I just wanted to show the setup on as well. Okay. So that's the Tomahawk setup. It also includes the Tomahawk trend and stops, the Tomahawk volume, and the volume paint bar. Okay. All the software that you see, the Tomahawk bar chart, the Fat Man, the pivots, the scanner, the trend and stops, the volume, and the volume paint bar are all part of the Tomahawk software system and is included with your initial 1 month trial subscription for $47, and then it continues on a monthly premium after that. If you are a Hawkeye user already, then the monthly premium becomes $99 a month after that. More information on that can be found on the Hawkeye Traders website. If you go over to hawkeyetraders.com and you go over Education Tomahawk Forex Trading System, then you'll find a whole lot more information about that. And I'll copy and paste that into the room for you. So you can just click and go. So you'll find out more information, background on the video, more information on what's included, what it's all about, the software that's included, and any trial member information. And this is mainly for trading the spot Forex market, not specifically applicable to currencies. It will not show you the the currency futures themselves. You'll probably need to have the main Hawkeye software if you're trading currency futures. You could, if you had the scanner on and you saw the strength or weakness coming in, then yes, you probably could apply that. So if you're looking at a potential euro yen, right here, euro versus yen weakness, and you can see that the yen is weak across all the currencies. So any pair against Any short-term pair against the Japanese yen would be probably preferential at this point. So if we were to pull up the Japanese yen, then I can see this is set up to show all of my Japanese yen pairs. Then you can see we are having a nice bullish run against the Japanese yen on the dollar, on the pound, on the euro, the Canadian, the Australian, and so all the way across the board, the Japanese yen is strong. The initial signals, the initial signals came in once you saw the this blank out. Then you got the initial trend right there. This would have been your trigger bar. This would have been your trigger bar. This would have been your trigger bar. And you can see where the very first trend dot is your initial trigger bar. And then you can validate that by the fat man. So you can see that the fat man is extremely weak at these points and is showing a lot of strength. But now you're starting to see that that weakness is coming back out, especially with regards to the Canadian or the New Zealand. It's been on a nice little run. So we can see we need to watch for that to come back out and trade on the longer term. On the longer term, though, you can see there's still a lot of potential left in those. So this can just cycle back out and then continue to come right back in again. But the main trend and the main idea is found in the scanner, and it helps you to point out and to profit from these on the short term. More information on that is provided in the Tomahawk training room, including the on-demand videos. So let me go over to the Tomahawk trading site here. Let me log in for that. If you go under the members area, click on Tomahawk Premium Room there, and it's going to ask you to log in. So I'll log in real quick. It logs me into the back end, so let me get that off and on for you real quick. There. So let me go over to the main membership site. Once you log in, you come right up to the blog page. Here you get a daily video that talks about how the system was used in current daily trading. So Marcus goes through and teaches you specifically how the system was used and how it performed. And you can go back through the previous record on that. Get a little bit more information about the Tomahawk trading system here. Okay, here is your daily archive. So you get a list of all of the videos. Here's the August 7th and so forth. And so you got the video archives, not necessarily daily, but these are the weekly, probably training classes that he goes through and shows you specifically how he's using these to trade, showing you how to trade longer time frames, how to use the weekly Q&A on-demand videos. And here's all your training videos. Specifically, here's some even for MT4. So if you want to understand and apply the Tomahawk system, then here are all the on-demand videos for that as well. All of this is included in your trial membership if you choose to take part in that. $47 for 30 full days. You get full access to the software and everything. So I highly encourage that you do that if you are interested in trading the Forex markets. Any specific questions on MetaTrader 4 while I have it up and going at this point? As opposed to the one nice thing about this is that you can see the color coding base of the Tomahawk software. All of the volume, the trends, and everything are all based upon the color of the pairs traded. So anytime you see red, you know that the Australian dollar is strong. Anytime you see purple, you know that the Japanese yen is strong. So it's based upon strength. So you're always going to see which one is strong relative to the other. And the color coding makes it very nice to identify that and to keep it in line with the same color scheme that you see on the scanner and on the Batman. New Zealand Canadian. Okay. Let me pull up the Canadian pairs then. Here's the New Zealand Canadian right now. Looks like on the 1 minute New Zealand Canadian is in a choppy mode. Okay, it is blanked up, but it looks like we are getting to see if the Canadian is starting to come in with strength, then we need to see this going down. But right now we're not seeing the volume supporting that. Let me put my volume paint bar on there just to be able to see that a little bit easier. Yeah, see, so you can see that the trend, okay, is showing the direction of the Canadian, but the volume and the price action is showing that that trend is not strong. So we need to see that continue to support. And this is showing that longer term, New Zealand is strong and Canadian is weak. So this is only a short-term cycle. Based upon the fat man, the Canadian is trending in weakness. So we would see this either stagnant because we can see New Zealand is trending in weakness as well. So that's not a good particular pair that we would look at. Ideally, you want to see where you've got a nice whole trend of weakness coming in line with each other. This shows you're not having any trade setups whatsoever, at least right now. The cross pairs that would probably be best to look at right now, you've got long-term strength in the yen, but weakness, and you're just starting to see the euro coming back with strength over the longer term. And so shorter term, most long trades result compared to the euro are the trades that look to be setting up. And as you can see, the euro has cycled up, the euro is cycling up, but here the euro is cycling down. So that's not completely matched. So you want to wait for this to start to turn up. And if this starts to turn up as this one and this one are both turning up, and you've got strength starting to come in, that's the ideal ticket to be in. Absolutely. So Thomas, you purchased the professional package for MT4, okay? The MT4 total package, that's correct. Can you configure alerts on roadkill? Yes. You got Tomahawk as well. That's awesome. Yeah, next month you'll only be $97 because you are a professional package user. That's right. So let me go over to the regular Tomahawk. I mean to the regular Hawkeye setup. Okay. All right, this is a 30-minute. You can see from a 15-minute that we're starting to see a bunch of dollar strength coming in right now. Okay. Okay. A lot of Canadian weakness, a lot of Australian dollar weakness. The New Zealand is extremely strong, so we'd be looking for that one to come back over too. But right now, the pound is the one that's starting to show a turn from extreme weakness. That's a 15-minute. Looking at the 30-minute, that pound is still trending weak. The dollar is turning up, and then down here you can see the dollar. Okay, I mean the hourly chart. The hourly chart, the U.S. dollar is coming from fair value. It's cycling down, has not started to turn yet. The euro is the only one that's plateauing with trends of strength. Okay, and then on the 30-minute, it's just oscillating in the mid-range fair value. So if I were looking for potential setups for trades right now, the pound dollar looks very interesting at this point. The pound dollar again, with these all the strength that was in the Japanese yen coming up into this, it's coming back down with weakness on the longer term. It's cycling. I would be very interested in a lot of Japanese yen weakness then. So the pound coming down in weakness, the Japanese yen could come back with strength. Pound of weakness, so they're trending the side direction, so they're probably going to be sideways choppy at this point, but volume is starting to show a build. Okay, so when volume is starting to give us these signatures that it's starting to build with strength, then we will look for the downtrend to be broken. Even on the longer term, we're starting to see these same strength buying action coming in. Then watch for that trend to turn. Okay, so if that Japanese yen starts to turn back down as it is, we need to see this pound cycle back up again. It came up, it came down. We need to see it turn and go back up again. Then this will be a confirmed uptrend. So Thomas wants to know about the roadkill indicator. Okay, so if we format the roadkill, you can see that you can set the time frame of the roadkill to be the time frame specific to the chart that you're trading. In this case, it's a 15. My second time frame really needs to be a 30. I can use a short key indicator, which is a capital I times 2. Oops, sorry. And that will automatically set it to be 2 times the time frame I'm trading. So 15 times 2 will give me a 30-minute. So that will be a good setup there. And then if you look at the alerts, you can turn your alerts on or off right here. I want to do the same thing for my heat map. I have it currently as an I times 2. Okay. And this roadkill, I want it to be an I times 4. I times 4, 4 times 15 will give me a 60-minute or an H1. So that's the ideal location for that. And I can turn its alert on or off right here as well. There we go. I do have a roadkill set up on my 30-minute chart. It is an I times 2, so 30 times 2 will give me a 60. So anytime I change the time frame of this chart, say I wanted to change it to a 15, then this is automatically going to be a 30-minute. So I can see very quickly the relationship between the two charts. And yes, if I were to go to an hourly chart, then this gives me an indication of a 2-hour roadkill. So this is a live chart, it's not offline, and I still can have non-standard offline times, so that's correct. Let's see. William, wouldn't it make sense to pick 1 or 2 pairs and get familiar with fewer pairs? Absolutely. Instead of trading all the pairs, that's true. If you become familiar with a couple of pairs, then it's probably best to trade. But a lot of times, some pairs are stagnant while other pairs are moving. So if you have a very limited trading window, i.e., you only trade for 1 to 2 hours a day, the first 2 hours of the day, then sometimes the pairs that you choose to trade aren't trending during that period, but others are. So that's why some people try to be responsive to the ones that are moving. And that's what the fat man is showing you. But yes, I agree with you. I truly prefer to just pick 1 or 2 markets to focus on and make sure that I do them well. That's right. Yeah, Williams says the object is to be right, not just to trade. So that's correct. You can be a generalist and do okay. You can be a specialist and knock it out of the park. You don't get up to the plate very often, but when you do, it's a good one. So that's great. I like that, William. All right, any other questions on MP4 or on the Forex market in general? Not that going to Forex wouldn't matter, but you can do the exact same thing. I just wanted to show the same system on another platform. All right. All right, let's move down then. Let's look at some futures markets. I know there's a lot of futures traders in here. I, for one, like to trade the futures the first thing during the U.S. Open. This morning, coming up to my desk, I did notice that the crude oil gave me a very nice entry point right after I sat down, right here. Okay. This trade held up until close to the open of the market, so I got out much earlier, but you can see the trade positions at this point with an entry point giving me a double dot buy signal. The actual trade started much longer before that. You can see that it opened during the euro the London Open this morning. That was the critical entry signal. But I was not here. My eyes were glued to the back of my eyelids, and my head was glued to my pillow at that time. So by the time I got up and got around to the office, this was the signal. And this signal was a very nice roadkill, which was coupled with a longer term volume roadkill. So I got a very nice double dot buy entry signal, which gave me a very high probability that the trend was going to resume the longer term trend, which is the whole idea behind the roadkill. It gives you a highest probability, lowest risk entry point. So in this case, I risked less than an ATR in order to hit a 2 ATR profit and then a 3 ATR profit, and then I was able to get out on a 2 ATR. I was looking for a 5 as my next target and missed. So as it came back down and hit my 2, which is where my stop was, then that's where I exited the trade and got out before getting into the room and getting things started here. So uh, that's my trade plan, and I kind of follow that as I come through. So when I see signals of entry, then I take profit targets at level 2 on choppy days, level 3, and level 5. Otherwise, I look for a 3, 5, and 7. I was coming up and out of a range right here. All right, so I took level 2, I took a level 3, and then my runner got stopped out at level 2. If anybody traded gold this morning, then it was stellar. I did not trade, but it was a beautiful signal. Beautiful, right there. I was still in my crude oil trade. So gold signaled a nice buy signal right here. You can see a really nice buy entry. Okay, it was coming up into some overhead. Here was a secondary signal for an entry if you missed the first, and this was a little bit stronger because you got a trend entry signal, not just volume. This was a little bit early, but this was a trend entry signal showing that the longer term trend, the 6-minute, was aligning with the 6-minute and the 3-minute. All right. And then if you notice the other charts, you could see that that was a roadkill showing that the longer term trend, which was the hourly, was already long and trending, and these were just simply coming back in line with those. And of course, the payout was quite big. When it usually moves, then it moves with big spurts up or down. So when you see these big moves like that, then those are great profit takes. When you see a big move up, take a profit. Big move up, take a profit, and then just wait for the signal to go, or just get out and then wait for a reentry signal. Gold has been trading pretty nicely recently, so if you've been following that, then that one's set up quite nicely as well. And of course, yesterday's trades in all of the futures markets were uh, beyond stellar. If you're a Hawkeye trader and you even halfway applied your rules, then yesterday's trading should have been textbook. That's about all I can say about that. It was is as easy a trading as it gets on the systems. If you follow Hawkeye, if you follow the rules, if you understand trading in any way, then trading yesterday would have been just textbook examples of how to enter, how to manage, and how to exit a trade with a large amount of profit, even with the initial risk. So waiting for your initial 15-minute opening, the first signal out of the gate was a buy signal. Here was a very strong conservative buy signal, and then the rest was just gravy. This was the Nasdaq market. If we looked at the S&P, then you can see the exact same market setup. Okay, right here was the initial open. Here was your initial signal right there. There's a really nice double dot buy signal which came after 9:45. Any 10 o'clock news came in and you got another confirmed signal. And right here is another one right there confirming even after the news came out, giving you plenty of time to get in, not only on the first, but on the second. and even the third, which is probably the last one that you're going to want to be looking at getting into. But you can see there's still quite a bit still on the table after the third entry signal. Okay, but once the signal started topping out, okay, here was a nice exhaustion bar coming up. You can see the market starting to turn and volume starting to decline as it starts to tail off. Okay, so as the price started to get away from the trend dots and then tail off right at this point, this looked like an exhaustion bar. That's why it plateaued out, but then a break. If you follow the 6 ways the market moved, this was a potential congestion entrance, but this was a break and a continuation of a trend run. This was a definite congestion entrance bar right here. Now you can see that as the volume started weakening, as the green volume started weakening, the neutral and then red volume started to increase as price decreased. So that was a very good sign of a reversal. And you can just play that same signal into the rest of the market. And then when you get the initial signal to go short, okay, which we did right there, confirmed short signal, then the rest of it was just, you know, follow the rules, okay, all the way up into the close of the market, right there. You can see the volume really pouring out. I probably would have gotten out of the market right there. I held until the very end of the trading day, okay, because that's what I usually do with my runners. I take profit targets out during the day and then let the last runner hold until my Hawkeye stop is hit or the end of the day comes. And those are the best two parameters to use, in my humble opinion. When you see the volume extension bar like you see right here, a new price, which is what this one was as well, when you see price extension with clear volume, then those are really great places to take profit. This one right there, that wasn't green. This one was, but it did not extend to new price. This one was. That's a green volume bar. It was in a new price zone. See that? So this bar right here would have been a profit take. And then this bar right here. And then you can see the end of the market signaled by all the dead volume and no more trading activity. Okay. Then the market picked back up again and started to do the rest of its thing that it does. And then you can see when the London session opened, that renewed activity in the market started to come back in. Here it is today. And then there's coming up into the London Open. And then there's the London Open. Okay, really nice entry signal for a very short take. Looks like about 65, like about 3 to 4 points. That was on the table there, and so forth. So what we're looking at right now, we're still trading the markets. There's news. We have crude oil inventory news coming out at 10:30 usually on these days. We are in a longer term demand zone. We're looking for buying activity to come in. We're seeing a lot of buying coming in at this morning time. You can see these price extensions coming in, showing that the downside pressure is not showing any signs of continuation. The upside is showing definite strength with buyers coming back in. So when the price is coming back down, you can see it's white. So there's no more buyers are coming in, but the demand placed on the market, the presence of aggressive sellers in the market, they're just not really showing that. So right now we've got a real choppy, range-bound market. And we know that because the fat boy is very decorrelated. Right now the market is showing a trend that the weakening or weaker markets are in control. You've got about 2 to 1 advancing versus declining ratio. So right now shorts are definitely in vogue. If you look at the overall market, then you can see there's a mixture of some up markets, some down. Longer term, so you can see that through the day, some of these are doing well, but others are not. So closer into the day, you can see that some are gapping up and some are not. And then if we go intraday, then most of the intraday stocks, and especially if you're looking here at the NASDAQ, which I have listed here, most of these are trending and are very weak. So they have a lot of weak opening and entry on that. All right, so the system can be set up and used for you if you understand it to get a very good feel for the market, where the market's going, and then how to trade that market. So trading with ticks as well, tick or time frame. The system can be set up and configured to trade, to help you to see and to manage those trades and to take those trades with profit and consistency. When your trade signals an entry, then you take your entry, you take your profit target, and you walk away calm, in control, and knowing that you followed your game plan and you knew that your game plan works. Robin, are the larger red, white, and green dots on the trend indicator part of the trend indicator or another indicator just showing that? The larger dots that you see are what we refer to as the no progress indicator. So if you format the trend, which it is part of the trend indicator, oh, that was the volume. Let me put the trend, there it is. Then you can see right here the bar 7 progress is turned either on or off. And what that does is that shows the larger dot right here or here. It always appears on the 7th bar. So if after the 7th bar there's no progress, then you get out of the trade. You need to consider whether to be in the trade or not at that point. That's all it is. It's an audit tool. If you're not already in profit by 7 bars, which you should be, then you need to take that as a sign to either get out or determine whether it's worth staying in the trade or not. Right? Yeah. If it is a good entry signal, then that's waiting for the price to reverse around. Exactly. This looks like a really good setup for a reversal. Here you've got crude oil coming back up to an overhead resistance, bouncing right back down into known demand, and now you're seeing price bounce right back out and come out of that. I'm seeing a lot of buying activity coming out of that. I haven't seen the long-term buying activity, but the shorter term could be back to a 49.63 short-term reversal. If you guys are fib traders, then this also looks like a really nice bounce pattern for fib. So if you're looking for the patterns, then you look for the bounce right back up to a 50 or 61.8% range as a reversal point. So if that's the case for a shorter term reversal, this is the high probability range. If this does not support that, if this trend down is not broken by this, then I would be looking for the 49.63 target. If it is broken, then I would be looking for a 49.23 or a break of the 49.29 and a continuation to a 48.98. But I think crude oil's got a little bit of stall at this point because at 10:30 we have crude oil inventories coming out. So right now I would be expecting this to just stall out and not do anything until we see the results of that report. Okay, all the markets, as you can see by the fat boy, are currently range bound. They are in a nice consolidation range, and the weakness looks like it's starting to come back in. Downside, it isn't showing a lot of pressure for it to continue to the downside. So right now, choppiness or range-bound activity looks in place because of all the weakness that came in from the initial run down. Yeah, crude oil uh, uh, inventory reports are coming out in about 20 minutes. That's correct. Gary, the time frame, the zones are always on my 60-minute. On the tick charts, I usually put these zones over on the longest time tick. Looks like I've not adjusted my speeds today based upon the gearbox, so I should do that first. The gearbox is a Hawkeye tool that shows me the optimal tick speeds to use every single day, which are in line and in harmony with the market. Because you can see every day that the markets breathe. So you can see this right here. As the markets breathe in and out, the expansion and contraction of volume also breathes out. The volatility, expansion and contraction. So the tick speed would go in line with that, and it only makes sense that you would change your speeds based upon the volatility of the market as well. So based on that, I've got a 619 as my fastest speed here, and then 1238 is the blue. So I'll change my second chart to a 1238. The third chart is a 2476. And my fourth one is a 4952. Now that will change these zones, but I always have my zones put on my slowest tick speed chart. In this case, 4952. It will recalculate, and yes, it did change the zone locations because it's a different speed, different ticks, but it did still give us a overhead and a single bounce criteria, and I've got essentially the same zones, a 4965 as opposed to I believe it was a 63 on the previous chart. And we're still looking at a 4890 area for downside if we get a break of the 4929. So these are confluence zones because we saw them on both time frame charts. So we were looking for those the same scenario on those. Is my setting instrument or 24/7, etc. So the time frame, then for the instrument itself, the symbol, then I'm using tick count for the volume, and on my properties, you can see I'm set up on a regular time frame session for the market. So that's basically looking at Globex. That's not the same as if I were looking at setting up my gearbox. I'm looking at the Globex sessions for crude oil, so I'm using all the regular time sessions. But on setting up the gearbox setting has to be set to the open outcry session. So the session time I have for my gearbox is the crude oil session times, which the crude oil session times are 9 to 2:30. 9 a.m. to 2:30 p.m. That's the open outcry times based upon the New York market. That's the exchange time for the crude oil. The NYMEX, the New York Mercantile Exchange, is where crude oil is traded. So 9 o'clock to 2:30 is the regular market trading hours. That's what you want to have the gearbox set to. But for the charts and the other things that you're trading off of, then regular session is perfect. Exactly. You don't have session times in Forex. You only need those for trading futures contracts. Or if you're trading stocks, if you're looking at stocks, you can look at stock trading. Here you can trade. I have these set up as regular session times. You can see there's a session times indication here. You can set those up to be regular. You can see all the ones that I have, but you can also do a US stock with pre or post market. So if I select that one, yeah, I can see all the pre-market and post-market data on the different sessions. So if I put something like Apple in, Then you can see the pre-market come up into the market open. Okay, and then the post-market, the market closes at 1600, but you can see this is all the post-market data and activity that occurred. So if you really want to see pre and post-market data, then you can load that session time up and it'll allow you to see that. But looking at regular session, then it cuts all that off and all you see are just the market close and then the market open. If you use NinjaTrader, then the session times are going to be a little bit different. Let me move over there real quick and show you. Let me click on crude oil. Oh, it is crude oil there. Okay, that's already set up. All right, so if you were to look at these instruments that you're trading, the data series that you are trading, then crude oil is set up over here. The session template I have, I just use the instrument settings, which by default is going to be the Globex template. You can, if you wanted to, you could load up the NYMEX. Here it is. Energy, regular trading hours. Okay, or you could do the extended trading hours. But I prefer just to use the default and allow the system to default me to the standard Globex market and then have it come in and set up like that. Because that way the default setting, if I switch instruments, then it will automatically be kept on default settings for me. So if I wanted to go back over to look at gold, then it's going to be set to the default gold settings. Or if I want to go up to the S&P or the ES, then it's going to be a default by settings, which is the markets that they are trading from. But if you're using Gearbox, then you need to set Gearbox for crude oil to be the NYMEX regular trading hours. So if you were to set that up and look at your data series, then on the Gearbox, then make sure that this setting is NYMEX Energy RTH. You're welcome. But for all the other charts, yeah, these are Globex 24-hour. Use default instrument setting setups. Are there any other questions? So now that I have Ninja up, go back to MT4 or TradeStation, any of these specific ones. See how decorrelated all the markets are. Gold, crude oil, here's the NASDAQ, here's the S&P, here's the Dow Jones, here's the S&P mid-cap. Very decorrelated. I like to see them all tightly wound together and trending, like we saw pre-market. That was really nice. You can see them well tight, and then they generally will trend nicely during those time frames. See how nice and trending they are. You're still seeing the expansion. The advancing issues way outweigh the declining issues. I'm sorry, the declining issues, the red one, are way over the advancing issues. So we have still are a very weak market. There's so many more declining equities than there are advancing equities. So watch for shorts in the market, and the directional trades are shorts unless we start to see this trend line going down and this one coming up, which will indicate a trend of strength in the market. And then once we see correlation in the fat boy, i.e. all of the markets are starting to trade, then that's when you're going to start to see the best trend. If you're patient and wait for these to come up, then you don't have to worry about trading a choppy market. And everybody hates trading choppy markets because any trend trading system does really bad in choppy markets. So you want to avoid choppy markets unless you're a scalper. Scalpers love choppy markets because they tend to get in and out when they get to extremes. And so when you get to the highs of the chop, then you're selling. If you get to the lows of the chop, then you're buying. And so it depends on the strategy that you're doing and how you're applying the tools to trade. I have not seen any direct relationships or correlation between gold and crude oil. I do know that gold typically will trade counter to a trending market. Since both gold and crude oil are dollar denominated based, they tend to trade relative to the strength or weakness of the US dollar. So those are usually things, but I've not seen any real correlation between crude oil and gold. No. All right. Nasdaq showing some really good signs of bullishness here, although it's for the same reason. It's the strongest of any of the other markets, so you can see that based upon the price action here as well. But we don't have anything that's tradable on this. Looking up into the time frame that we're doing, we did get a signal to buy at this point right here, but that signal so far has just been stalemate. And if you're looking at the overall market and the tick settings of the market, then right now the market's waiting on something. Looks like I need to refresh my data. This looks like a little bit old. Turn that off. There we go. That looks much better. Notice the data. Sometimes you have to reload the data into your NinjaTrader cache. It gets a little bit stale. Sometimes just to do a quick reload and you're back up and running again. So that's good. I don't know if you have to do that, Gary, but I do. I have to do it quite often. Kevin, I'm sure you mentioned it already, but do you have a video tutorial description of Tomahawk? If you go to the Tomahawk page and the link that I'd given you there earlier, then yes, there is a very short description of the system and how it works. If you subscribe to Tomahawk, then yes, you get full demonstration videos of how the system is used and how it works, and you have access to all of the weekly training sessions and the Q&As that we have from the start of the system. So you've got access to all of that within Tomahawk, absolutely. Robin asks, is the zone indicator included in any of the packages? No, it is not. The zones are a third-party indicator that Hawkeye has licensed and is using by permission from the original developer. So we do not include that on any of our standard packages because we do sell it, we do support it. So we provide all of the support and updates and everything for the software because it works so nicely with our software package. But we do not include it in any of the other packages. So it is sold separately. I just had issues with your Ninja data load on gold. Okay. Yeah, gold is just simply do a Control Shift R to reload the data, and that usually clears most of the issues that are coming out. And also make sure that you're on the current gold contract. Right now, gold is on a December contract on NinjaTrader. There was some screwy things going on with the gold futures contracts here recently. TradeStation had shown it still as a July contract, even though it had traded up through August and even into September. I think on TradeStation it even shows that. Let me see if I can pull that up. Yeah, on TradeStation it still shows as an August contract. So it's really kind of different. You can't pull up an August contract or even a September contract in NinjaTrader. It only gives you the December contract. So make sure that you have the current contract loaded and that the data is representative of that. Then Control Shift R will give you a nice clean refresh of your data coming into that. That's always fixed the data. And when I see screwy looking data, Control Shift R usually clears that up without an issue. Glad I could help. All right, are there any last minute questions before we head out of this session? Is there anyone here for the very first time who is interested in Hawkeye, would be more interested in looking at Hawkeye on the live edge of the market, or interested in getting started with Hawkeye? If so, we have the Hawkeye Starter Package. The Starter Package is a selection of 5 of our most popular and most important indicators in a single package. I'm showing it to you right now. The Hawkeye Volume Starter Package has all of our volume indicators. The Hawkeye Volume, which is shown down here on the bottom. These are volume magnitude bars which have 3 different color codes. Red showing the presence of aggressive sellers, green showing the presence of aggressive buyers, and white showing a neutral or an even representation of both buyers and sellers. So either the buyers have stepped out and sellers have stepped out and you just have an equal, but if you have a very large magnitude, then you can see there's aggression on both sides. But it is usually a normal distribution. And if you look at volume spread analysis, then we're looking at the distribution of volume over the price bar. When we see a very normal distribution, it's not bimodal, it's not standard deviation is not skewed in any way, then we see usually a white or neutral directional bias. But anytime it's green, we're going to be biased long, and anytime it's red, we'll be biased short, and we'll be looking for buyers or sellers in that market. And the color of the paint bar, the price bars that you see is the volume paint bar. So it is an indicator that allows you to paint the color of the bars based upon the color of the volume. So that gives you a direct representation of price and volume at the same time. It's not dumb volume. If you were to just turn this off, then you can see what just volume is. Dumb volume just simply looks at the open and close of the bars. If the close is less than the open, then it's going to paint it red. If the close is greater than the open, then it's going to paint it green. That's all it is. Otherwise, you're just simply looking at magnitude. But if you're using volume spread analysis and you relate that to the price action, which is the key, then you're going to see that the significance of volume and the magnitude are going to play a key role in determining the direction of price. So you couple that with the pivot. The pivot identifies isolated lows or isolated highs in the market. We know that isolated lows and highs are key because we expect to see 3 to 5 price bars of action following these, and the Hawkeye wide bar. Okay, the wide bar shows twice average true range signaled. Usually occurs during either volume exhaustion or during economic news or other events. So we can see when the price action is such that it's twice the ATR of price coming up into that bar, then it signals that the highest probability trade is a no trade at this point, because price usually sucks back into the body of the wide bar, the highest probability. And then the second would be a breakout, a confirmed breakout. And the confirmed breakout is once the suckback occurs, then if price breaks the top of the wide bar, then that is a confirmed breakout trade. Usually it reverses or doesn't trade beyond that. And the breakout has to be in the direction of the wide bar. So you get a close and open, then you get a break above that, then you're looking for continuation. Those are the 5 wide bars. Those are the 5 tools that are included in the volume starter package. And let me see if I can find that here. There they are. Let me give you a link. There it is. HawkeyeTraders.com/WED Wednesday. That'll give you a link to go and purchase the volume starter package for 97 bucks. We normally sell it for $360 every day in our store. But because you're part of my class today, and to help you to get started, then we're offering it to you for 97 bucks. One-time fee, it's no recurring costs, and no subscription. Just get started and get going right away. Randy, does TradeStation hold Forex data, and do you have a platform preference for trading Forex? Okay, absolutely. TradeStation does have Forex data. So let me pull back over there and show you that. So if we were to go over here to these Forex markets, then you can see that absolutely TradeStation still does have access to and delivers Forex data, but TradeStation does not allow you to trade Forex markets. So you have to have a separate brokerage account set up somewhere else in order to trade, because you cannot trade directly on the TradeStation platform using Forex data. You can do all the analysis and set it up for trading in a simulated account, and a lot of our traders do that. They will use this as the analysis for the search, for the scanner, for the advanced tools that you see here, but make all of your trades on a different platform. For Forex market, there are a lot of nice tools for trading. Probably MT4 would be the platform of choice if you're trading the market. So if you want to do both analysis and trade on the charts, MT4 is a nice one. NinjaTrader also is very nice. It has all the advanced tools of TradeStation on NinjaTrader, and you can get Forex accounts set up through a NinjaTrader. NinjaTrader platform is free, but if you want to trade on the platform, then you do have to purchase a NinjaTrader license. Exactly. So the choice is up to you and to preference that you're looking for and what you're looking to do with it. Each of the platforms have unique features which are nice or not so nice. And so you have to weigh and decide which one of those that you particularly like, or which one that you are the most familiar with. I recommend you stay with the platform that you're most familiar with. Yeah, MT4 does not have some of the features that the others have. Like NinjaTrader allows you to trade with tick charts, range bars. MT4, you only have fixed time frames to use and choose from. So a lot of the tools that we offer for the other platforms are not available on MT4. But they are available on NinjaTrader. They are available on TradeStation. Okay. Well, thank you guys very much. If there aren't any other last minute questions, then I will head out for the day. Let me go ahead and stop the recording at this point.